Okay, cool. Recording has started.
I just wanna connect my mouse quickly.
No, all good. All good.
Cool. So I did send FX Father some videos. I don't know if did you get to it?
Bro, I only saw that message now when when I messaged you. So I'm sorry, man. I'll
Okay.
see if I can send it to everyone afterwards. But I get so many WhatsApps and things, like things get drowned out.
Okay, no, that's fine. Yeah, so that was just yesterday's analysis that I was seeing for sellers. So those sellers here, and then also I included like the take profit areas or where I feel like price would have reversed, right? So I'll go through that tonight also. Then you can send the video tomorrow.
Yeah, yeah. No, all good.
Okay, cool. So um, we know that midnight price is the true market opening, right? Okay, so that's what I use as the true market opening price. So I like to look at the midnight price when I'm analyzing. It gives me more or less an idea of what will happen during the day, right? So if we're close to any areas of interest, where we've been coming from, which areas of interest we've been coming from, and then I mainly use like imbalances and liquidity pools to get my targets, right? So I'm going to go through yesterday's position just to give you guys an idea of what I look at when I'm looking for a position, right? What was yesterday? Yesterday was, okay, not yesterday. Let's start from Monday. Okay, cool. So we have that midnight price open right there, right? So I mainly look at the 4 hour and the 1 hour time frames. I'll include the daily sometimes if I don't see like really good structure on the 4 hour, 1 hour. We can see during this day, right, that we traded lower and we started coming up higher. Now, for me, in a case where there's like a major wick, right, there's always a liquidity grab that could happen and a reversal at that area. So we can see if we mark out this wick here, right, that we traded through and we started trading back up, right? So just let me know if it's a bit noisy in the background here, guys.
Yeah, it's all good and clear on my side.
Okay, cool. So there are areas of interest to the upside when you're creating a huge imbalance during like your London session, Asia session, right? So we can see that Monday's price here opened and then we started trading lower. This open shot into this fair value gap and started trading price lower, right? So our main target is to try and trade above that midnight price into an area of interest above that on the higher time frame, right? To grab an extension like this up higher. So when this is happening and you're trading below that midnight price, your first area of interest, or for me, would be this ICT order block right here, right? That came out of the fair value gap. So I like to look at these order blocks on the higher time frames and try and target these areas. Also, the imbalances, right? So I look at targeting the imbalances and finding reversals in those areas. So let's say the trend is lower. I'll try and fill the imbalance right there and then try and find sellers to the downside, right? There are indications that you can look at where you will know that it's not going to reverse in that area. For example, if we look at this, it definitely overwhelms that imbalance and closes way above it. So the next best thing is a continuation in this case. But when you're looking at price and price is holding those imbalances, like if we look in this area here, here's the imbalance, right? And price holds that imbalance and closes in that imbalance. You're looking at the, the reversal to the upside in this case where it was trading lower into the imbalance, right? In this case here. So I executed sellers in this area, and one of my first take profits were here, right? Was it in this area? No, I lied, it was in this area. So in this area here, because there were no imbalances, one of my first take profits was that low. And you can see we reversed in this area. And then again, price goes into that imbalance or fair value gap, if you want to call it that, and holds that price, tests it 2 times, and then the extension happens. Now, I've noticed that when you're in these areas, you're looking at more than one test of those areas. So when I messaged in the group, I did say I expect price to go up and test again, right? And if that's the case, and then I'll take my positions at break even and try and get a better position in. And that is exactly what happened, right? We traded lower first, and then we traded right back up into that area on the lower time frame, and then lower again. And then here's another test of that imbalance there that was filled, right? Until price eventually found your support area and shot up higher. Also bearing in mind that you've got this order block here that needs to be covered and this little imbalance right here. So when I'm finding positions, I like looking at these higher time frame areas where I can grab positions and it's seamless. It doesn't, consolidate, or it doesn't beat around the bush. If it's going to trade lower, it's going to start trading lower, right? In some cases, you'll get that test of your area one more time or two more times, but eventually we do trade lower if it's trading higher, vice versa. So we can see in this area there was 1, 2, and then a really huge tectonic activity your 1 hour time frame, and then we got the trades lower, right? Way into our imbalance right there. If you're familiar with inversion fair value gaps, you would look at the most sensitive part, right? Right there. And that is your reversal area. Cool. So when I'm on the lower time frames, I'll usually look at the 5 minute. I try and not look at the 15 too much because gold moves very fast. So you want to try and catch that entry like on the get-go, right? Looking at today's price, let's see where we were. Where did I catch those sellers? I think it was here, right? No. Let me just check where I bought those sellers quickly now. Sorry guys, just a sec.
Sorry, Z, while you check there, I just want to note to the guys. So when Z said midnight price, right? I just want you guys to take note that he's using UTC -4 at the bottom right hand corner, which is the New York time. So you would look at the New York time midnight price as opposed to South African time midnight price.
Okay, cool. So today was a bit of a tricky day, right? Because we got the extension from market close yesterday, running right through the Asian session. So in a case like this, I wouldn't like really aim for, a really big move, because what would usually happen is you would consolidate from the London session onwards, right? And then maybe you'll get a move on the close with like a continuation or a take on liquidity, and then Asia trades in the opposite way, right? So it was a bit tricky today. When I looked at the chart, we were like already trading up higher, right? So what I did was I looked at the liquidity build up, right? So on the 1 hour time frame, we can see that there's a fair value gap right here, right? And we can see that there's a fair value gap right here, right? So the market left this liquidity and we were trading around this area here. So at first I thought, okay, cool, maybe it's your sellers to the downside, right? Because we're holding price, but we should be like holding price more or less in this area, not getting so much of pressure down in this area, right? So if we look at this, we hold price compared to where we hold price here. You know, it's a bit risky to take that entry in there because of the pressure coming and keeping price below that imbalance, right? So what I decided to do was take that fib from body to wick. So personally, I use the body and the wick, right? And I looked at while we were trading here, I was looking at the discount premium area. And I said, okay, cool. If we're in the discount area, we need to trade a bit higher into the premium area. And my area of interest would be here, right? That would be the closest area of interest to catch a move to the downside, with one take profit being here, one take profit being here in this area, closing this because price could reverse from here, right? And then if we're going to fill this imbalance, most likely the chances are we're going to lows here. So this here would have been the liquidity build-up, right? We can see the flag pattern and then the run higher. So for me, okay, cool, we've got more to the downside than we really do to the upside, right? So there is some leeway for a pullback and to take liquidity. So once we came into this area, I went down to the 1 minute time frame, and I'll show you guys the entry model that I used, right? So, and I actually took another video, but I don't know why there was no sound, but I got the entries over here, and I got some more entries coming down right here. So there was a bit of whiplash here for me. I was a bit skeptical, but eventually we did make our way lower, right? So on that 1 minute time frame, remember I'm basing my trade off these time frames because I know that even though we may move lower, there's a high chance. So what I looked for was either a change of character or any sort of pattern that tells me that there's going to be sellers. Now, not candlestick pattern, right? A sequence. So in this case, it would have been your 3 drive pattern. So that's your first high, right? And a low, your second high and a low, and then your third high and a low, right? So once we came up and we started consolidating, I added in my entries here because this here for me is an entry model, right? I didn't enter right here. And the reason why was because I didn't want to take a chance. I wanted to wait for like a confirmation sort of. And for me, in this 3 drive pattern, right? You guys should take some notes so that you can remember. I look at the second high, right? Right there. And I make sure that we close within that area. Once we close within that area, I start scouting an entry. Now, when I'm adding entries, I'm adding a lot of entries at a time. And on XM, the spreads are very, very tight, right? So my entries really, really need to be like super precise. And I enter like 9 positions, something like this can take out a full $20 trade, right? $20 account. So I like to be super precise. I don't just like stack my entries in. I'll enter one and I'll wait for it to move and see if it's still holding price with a stop loss above. And then as it, consolidates and gives me more pressure to the downside, which I can see, right, is visible with these engulfing candlesticks here, I start adding more entries because I know that because of my entry model, we should not go above this, right? So I'm really sure of myself when I'm adding these entries. What I would suggest you guys do is don't just add multiple entries, use a micro account, add 1 or 2 entries, see how that goes for you. Because even with that, it's a lot of money very, very fast, right? So add the 2 entries and test the water and see. Because when you add multiple entries, it weighs a lot on your psychology, right? Imagine you're running 10 positions and you have $10 per trade, and that is just like a move from year to year. That is already like $200 or $100. Um, and then you're running like to these lows, and eventually you're seeing like $400 or $500 in this area. It becomes really like taxing on your psychology, especially with a small account, because you start seeing like the possibilities of the small account, and that could lead to impulsiveness running into this market. Another good textbook entry, right, which you could have caught, something that I personally like, is the ICT market structure shift, right? So you could have looked at the immediate low right here, right? And when you look at this immediate low, you're looking for a really good push below breaking structure, right, to the downside. You don't want to see, let me see if I can find something for you guys. You like here, so let's say here's a low here, right? You don't want to see something small like this. And you'll sort of know it when you see it. I mean, this here is very, very noticeable, right? So you've got this entry model in right here also. So what you're going to do is you're going to mark out that low. You're going to find that engulfing candlestick to the downside. And you're going to take your fib. You're going to take it from high to low, right? Once you get the retracement higher, you're going to look at your optimal trade entries, right? And you're going to look at where price is holding. Now, you can mark out fair value gaps, and you can mark out order blocks on the 1 minute time frame, right? So, for example, this here would be considered a order block, right? Because of this impulsive move for me, right? So I can see how price is building up in this area. I can say I've got an optimal entry of 8.2 here, right? 7.2, 6.2, and the 50% area as well would be an entry point, right? Now I'll show you how precise this exact entry model is. So you've got the liquidity take up in this area. You're staying within that order block, right? You can see how we're closing in the order block. Now remember, the wicks do the damage, right? But the body will give you an idea of what price is trying to show you. Okay, so you've got the optimal trade entry, that's one confluence. You've got the order block, that's your second confluence. And you've got the fair value gap, right, in your premium area. Remember, you don't want to take entries in this area from the 50% lower, because you're looking for buys, so you want higher pricing for buys. So, I mean, sells, sorry. So you want higher pricing for sells. Because the bias is sells and because the liquidity is to the downside, you want to find entries above in your premium area, right? So you've got 1 confluence, 2, and 3 confluences. That's a good setup, right? Now let's say you entered here, right? And maybe you had tight stops, right? Once you trade below that 50 area and any fair value gap or point of interest for you, right? It can be a breaker block, fair value gap, whatever you guys use. Any POI in that area will give you a resistance, right? And this is when the algorithmic delivery run jumps in. Okay. Now you can scalp multiple entries in that 1 minute time frame. I don't suggest you do because the pullbacks are crazy on gold, right? But you got one entry on your 82 area. You've got another entry on your 50 area, right? So if I'm scalping on a day like today, I'll look for things like this on the lower time frames. You've got a fair value gap entry right here, right? So that's your FEG right there. How do you know that it's going to hold price? Because it's closing within that high, right? There it is. It's still closing within that high. It will retrace if it closes above that high. That's how you know it's going to reverse. Okay, so you've got another FEG entry over here, and you've got a good run lower, right? There's a good take profit area underneath that 1 hour lows, because remember, it's a small trading range that you're working with. Okay, this entry model works also on extending days. So you can use the 3 drive pattern if you want to. You can use this ICT model, right? You get like a better confluence, I think, from the ICT model. Like an entry up in this area is a bit risky, right? Because you aren't sure if this is going to be like a trap for you where the market will run higher and then eventually come down and take you out of your positions. So this is a risky entry, but an entry like this is quite good. Now, time plays a big um, role in a model like this, right? So when you're looking at your areas today, for example, right? When you're looking at your areas of interest, you've got to make sure that it aligns, right? Because what happens is you get whiplash in these areas if you're in it before it actually is supposed to run, right? So as much as this looks appealing where you enter and then the market runs lower and it eventually gets to the take profit area, on the lower time frames there's a lot of whiplash if it's the wrong time that you're entering in. So if London is trading higher like today and it comes into this area and you still try and enter into this market, you've got a really huge whiplash that happens to the upside, right? But if you look at this area over here, right, 8 a.m., it's a good time for New York, right? You've got some volume in the market as well, right? It's close to market opening time. You've got 1.5 hours of trading, and it's an algorithmic delivery time. So it's better to wait for the market at the right time to enter into a position like this, right? So even though some days you'll get really small positions running lower or higher, right, in your New York session, there are days where you get very big positions, guys, like huge positions. So unfortunately, this day was a bit of a cuck day yesterday, but if you see what is happening, right, with price, so we've taken a low here, right? And this is just reading price off the bat, right? Even if it was not printed as yet, I would have read price the same way. So we've got the rejection coming out of that area, the fair value gap, right? We've got a swing high right here, right? We've got liquidity to the upside. right? And we've got this fair value gap right here. So if you want a more optimal entry on that, right, you wouldn't use the immediate low. You'd use the second low because that's where the price leg starts, right? Again, body to wick, right? And we can see how we test that A2 area, right? Price is holding the fair value gap. So even if you didn't get in here, right, there are other opportunities on the lower time frame where you could have gotten in a place like this, right? So again, I'm only using the fib right now because I have a market structure shift, right? I have my confluence to measure a price leg and to use that price leg, right? Because it's a valid price leg for me. Okay. Um, Another confluence is making sure that you look at where liquidity is forming, right? You don't want to use this as a double top and then price runs higher. So always equal highs, a high chance of the market trading through it, equal lows as well, a high chance of the market trading through it. So for example, you've got these relatively equal lows here and here, right? The market runs right through it. See that? So, a lot of retail traders may miss a move like this and try entering in this area and they leave orders. This is my understanding of the knowledge that they leave these orders in the market and the market needs money in order to move. So the market runs those orders and eventually, you get the direction that you're looking for. Just market makers are clever. They're more clever than us. So that's basically it, guys. Let me see if I can think of another entry model for you guys. Um, your highest chances of getting a good run, right, is either at the bottom or the top of that imbalances. Okay, those are your highest chances. So if you have a lot of confluences, that allow you to trade in that specific direction, you want to get your entries either close to the top or close to the bottom, right? You will know on the lower time frames that it's changing character and it's holding price to go to the downside. So that's why sometimes you'll see I'll enter the market and I'll say, okay, cool. I'm going to try and sell this market here, right? I'm going to try for sellers here. But then sometimes price runs higher, right? And then eventually I get the entries above and then the run lower. So I always monitor both the top and the bottom. Um, I don't really look for, areas of interest on like your 15-minute or your 5-minute, but if it does align, right, it will definitely move price for you. So for example, here's the 1 hour. If you go into the 30-minute, you'll see that there's or in aligning fair value gap in that area right there, right? So there and there, right? And then I think the 15-minute as well, as it just a little bit higher. So from the to the right, plus you've got this order block right here, right there. So you see the run to the downside, right? And this was not even like a slow position. It was a really, really fast position. Like you didn't have to wait long to get to that area, you know. Um, Trust me, it may look small right now because you're seeing the big extensions, but when you enter and you see the actual amounts of money sitting in this market for these like really small ranges, you will understand like holding a big range is going to give you good risk to reward. Holding a big range is going to give you like a good payout for that position. So yeah, man, any questions, guys?
Hey man, can you hear me?
Yeah, yeah, I can hear you, bro.
Yeah, but I don't have any questions about like the market and the ranges and stuff. I might just watch the video tomorrow so I can just write everything down because yeah. But I wanted to know how do you stack your trades? Do you like when you stack trades, right? Do you all your trades have one stop loss for all your trades?
Yeah, all my trades have one stop loss. So remember, I'm putting on a risk per trade, right? So if I'm
Yeah,
trading like a $20 account, um, and I'm putting in 10 positions, like that trade, like each position is it's gonna blow my account within like $2, right? Worth, which is not a very big move. So when I stack, I either risk the whole account. If I'm trading a standard account, then I won't risk the whole account. I'll use a stop loss. So I'll maybe say, okay, cool, I have $150 in this account. I'll risk $50, right? So I can put in 5 positions for $10 each instead, and then try again and try again if it takes me out, because there are times where I'll enter like 2 or 3 times just to get the correct entry, because I overwhelm my account with the stacking. So I'll just like be super excited, and I'll just like enter, and then a pullback will take me out, and then I'll have to refund my account and enter in the same place, right? Because I know that's like my area. And then it will take me out again, and then eventually I get like the right entry at the right time. But by the time it like maybe trades from my entries are maybe here, by the time it gets to here, that's like everything recovered already, and then the next move is, profit margin. So I know that the risk is a lot when you're stacking. So that's why I'm saying like don't don't stack your entries just yet. Get a feel for the market, you will realize how efficient this market moves when you watch it, and you look at these areas, right? And you realize that it's just as simple as entering at the right time to get an extension that's going to give you $300, from a $20 account, um, or 150 to $200 from a $20 account, right? So what I would suggest you do is add one entry, look if price holds. Let me just see here. So when the market does something like this, right? This here. This is a good sign that the market is about to reverse, especially if you get like these flags and stuff that's supposed to lead you, into a certain position. So if you guys know flags, right? Looking at like something like this here, this is a retail concept, right? And then the market gives you that move. Now remember, this is a lower time frame. So in a case like this, right, there's liquidity on the upside. So it's grounds for a reversal. So what I look at is the consolidation. But if I'm stacking my entries and I'm adding multiple entries, right, once it starts consolidating, I try and find the lowest point to enter because I don't want that whiplash down to take me out. See, so when you stack, enter your first position on the lows, right? So that you know if you're entering on the highs and it trades lower, there's minimal risk, right? Um, when you're in this area instead. So target your lows if you're trading higher in the consolidation after the liquidity is taken, or you get like this retail trader trap happening over here. And as the market trades higher, right, add another entry, check your risk, right? If my stop is here, what am I risking for these two entries to get down here, right? If you're comfortable with the risk and you can put on some more risk, then enter more, right? But don't be greedy at first, because to make a lot of money, you may have to lose a lot of money, right? But if you're level-headed, right, and you know that if I have 4 positions in here and I run up higher into this high over here is going to give me maybe $50 per position, that's already $150. If you had 10 positions in, okay, cool, you're making a really big win, but rather be reserved, and be sure first before trying to take that sort of risk. So I enter all on one area, um, and my stop loss is either below the low or the high, or I'll restore account and allow it to, do its thing. And if I'm really sure and it takes me out, then I refund, another 350. There are brokers that have like cheaper minimum deposits, but I'm okay with like XM and their service and stuff like that. So yeah, man, I hope that answers your question, bro.
Yeah, man. Thanks. I just wanted to know because most of the time I'm not. Sorry, bro. Just 1 minute. Yeah, I was saying most of the time I just place one trade, right? So I just place one trade and I don't know how to stack. So stacking for me is really different because I think if I stack trades, I have to like put one position in, then when I put another position, I have to go back and place my stop loss in that position that I put in now. That's why I was asking.
Yeah,
And
so
yeah, I was sorry, man. And this ICT model thing, I didn't quite get it, but as I said, I'm gonna check it in the videos tomorrow. So because somebody else might have some other questions. And I wanted to ask, I know it's a quite weird question, but is this backtestable? Can I backtest
yeah,
this?
yeah, you can backtest it, bro. You can definitely backtest it. There's a move that happens every day, right? Based off this year. And if it doesn't happen on that day, right, you're either getting like consolidation or it's a continuation of the previous day's move, right? So what
Mm-hmm.
you're looking out for is you're looking out for the daily open, right? You're looking out for imbalances near to that area. And if there are imbalances, right, what are the confluences that allow you to trade into those imbalances or to trade that liquidity, right? So you're trading towards liquidity areas and you're trading towards imbalances to fill imbalances. Um, Also check for reversals in your imbalances when you're backtesting, right? Um, yeah, and you don't necessarily have to use the fib as yet, right? So just lay down the basic foundation for, spotting the position. And once you have that eye for it, and how you'll know is you won't trade it, you will watch the area, right? And you will allow the trade to play out without you participating in it. And when you see this happening, it allows you to have more confidence in, the model and when to use the model and how to use the model, right? Because not every imbalance is going to give you the position. Not every imbalance is going to give you the trade on the get-go, right? So when you're backtesting, um, once you know what you're looking for, look at it on a live market. Don't enter, not even on a demo account. Watch it play out. Watch where it's going to. Note that down as well. So, like I journal all of my positions, right? How I was feeling during that position, how I entered, um, like all of those things, what I saw on the chart. And when you're live testing and you're not entering into the market, you're you're enhancing that sense of finding the position because you're watching it play out as it goes. right? As opposed to seeing back data and saying, okay, cool, I can see like, okay, we closed here and we took this high, then we traded lower, took these lows here eventually, you know. Yeah, so I think familiarize yourself with the model and then watch it on live market for a couple of days. Trade your normal model that you usually trade on your normal P, but watch gold, and then, you know, try with one entry, and then, you know, as you get more efficient at, you can add more entries into that.
Okay, man, thanks. And sorry, one more question. I wanted to know what's the time, because I saw here you said midnight time, New York, midnight time. So is there a specific time you trade, or like there's a specific time you trade and stop trading?
Yeah, okay, cool. So you see I have this indicator called ICT kill zones, né?
Mm-hmm.
So there are algorithmic delivery times within the market. So times where it will just follow trend and keep going until like your liquidity areas or it fills the imbalances or whatever. Um, so when it comes to the London session, I don't know what time is it in New York, but I start watching price around like 7:30, 8 o'clock in the morning, right? And I look at the behavior of price. I look at, you know, the possibilities. So like today, maybe trying to run up higher into this area. Um, and if I don't get it in the start of the session, I'll look at the end of the session, right? So if nothing is availing itself for me in the start of the London session, so from 8 to like maybe 9 o'clock, I'm watching the chart, looking if I can see an entry or if anything is forming for me to, you know, catch a position. Um, and then I'll catch it from 9 o'clock onwards, most likely. And then, what time is London open South African time, guys?
I think it's
It's
nine,
9 a.m.
8 or 9.
9 o'clock,
Yeah,
ne?
nine,
Yeah, 9
9
o'clock.
a.m.
So on that London open, that's when I'm looking to take positions, or just a couple of minutes before, right? Depending on what avails itself. So with the London trade, you're looking at trading so from the London open up until I think it is 12 o'clock. So 5 a.m. New York time. Okay, so there is 5 a.m. New York time there, right? Um, Let me just see. Yes, 3 a.m. Okay, cool. So it could be a 2 hour window. So from 1 a.m. to 3 a.m. But it could continue up until 5 a.m. Right? So that's the algorithmic delivery time that you're looking at for London. For New York, okay, so New York is a bit complicated. Sometimes price will run from like 7 a.m. and then consolidate the rest of the session will just be like very choppy. Sometimes it like consolidates first and then it will run throughout the whole session, right? So let's just see. I think it's from 8 a.m. Yeah. Okay, cool. So there are two, right? You can look from 6 a.m. I think up until what time is this? 9:30. So 6 to 8:30, right? That's when you can look for a position to run algorithms lower or higher. And then again, this one would be your main one from 9:30 a.m. up until 11:45, let's say 11:30 a.m. Okay, so you're trading if it's 1.5 hours, 6 to 7, 7 to 8, 6 to 7. So 2.5 hour window, and then from 9:30 to 11:30 or 12 would be 9:30, 10:30, 11. 9. So let's say 3.5 hours, I think. 2 hours. Yeah, 2 hours, sorry. So those would be, yeah, my algorithmic delivery times.
Cool, man. Got it. Thanks, man.
Did you guys get that? There's another
Yeah, got
one
it
for
on my
PM
side.
session, but I don't know, the PM session, I don't really trade the PM session, guys. So I'm not like really familiar, but it looks like it can be from 2:30 up until market close, where it runs in one direction. So here's a simple position here, right? You can see again, we're closing towards like the low of that, the imbalance, right? So market is not closing close to the high, yeah. So if we can even use the fib on this one, I think we just do that there, right? There's a really small fair value gap here. I wouldn't want to use that, but let's see on the 5-minute time frame what that looks like. Okay, cool. Much better structure on the 5-minute, right? So you've got this order block here, right by the 8-2, right? And then if you mark out the wick of that, you can see we're holding price. So entries in that area, once you get a close in that area, would have been good to catch this evening session up higher. Yeah. Yeah. If it doesn't run right in algorithmic delivery time, then it may have ran before that, and it will just like give you this really shitty movement during that time. So just be careful of that. It does move in one direction, but it will give you like really cuck movement. So just be careful of that. And then there could be like just a take on liquidity when you're trading in the algorithmic delivery time. So it could trade to the upside the first half and then to the downside the second half and take two sides of liquidity. Okay, so also just be careful of that. That's two positions, two tradable positions that you have right on these lower time frames. Yeah, but like I said, your main chance of getting a good position with gold is filling the imbalances and going to like your order block areas or liquidity areas. Not really like your support or resistance areas, right? So this price is still holding over here. It looks like the price wants to continue lower, but we'll see. If it does want to continue lower, like I said, I'm looking for a first fill this here, and then your second fill in this area over here. And then if we get enough volume, we can take every low here, right? Once we take the lows, that's your next fill down there. And even more volume could give us that run below Monday's lows, right? So some good sell-offs. I use like other things as well, like looking at the daily highs and daily lows and stuff like that, also to sometimes determine trades, but not all the time. Right, this is mainly what I look at. So feel free to check out the model, guys. Feel free to test it. I hope that it will give you a good edge while trading this pair. Um, I I don't suggest you guys try and use it like on the Nasdaq and stuff like that, because it doesn't really trade the same like gold trades. So yeah, I did test it and stuff like that on like other pairs. It's mostly efficient on this pair. All right, cool. Is that it, guys? Anything else?
All good on my side, man. Thanks for your patience. The rest I'm gonna check out on video.
All right, cool. Just one more thing. If you guys are using this ICT FibNet, good areas to trade to is your 2 and 2.5 as your take profit areas, right? So those are also like reversal points as well. So price could reverse in that area if you got like proper confluences backing that up. Yeah, just a good tip for you guys. So when you're holding like a position maybe like this here, you're not really overwhelmed by, the amounts that you're seeing. You're rather more focused on getting into those areas, and watching price get there, instead of, worrying about like how much of bag I'm making right now. Because you may cut yourself short. So always focus like on the chart, not your amounts of money that you're running. And yeah, I think that's it, guys. Wow, I could have still been in the salary. Anyway,
All right, guys. Yeah, are there no other questions for Z? Everyone good?
was it that simple, guys? If it was that simple, you guys know how to trade.
No.
Like, if you guys caught on what I said, you guys definitely know like what you guys are doing.
Um, I'll get back to you with some questions. I'll just rewatch the video and make some notes and just put the questions on the Discord.
All
If
right,
that's fine with
cool.
you.
Yeah, no, for sure, man.
Yeah, because I need to familiarize myself first. Seeing that I'm still new to trading, so yeah.
All right, cool. Must I run you through some basics, bro?
Yeah, if you want to, if you have time for it.
Okay, cool. So let's look at what a fair value gap is, right? FVG, what an order block is, and an imbalance. Okay. So a fair value gap is a gap in the market that either needs to be filled or will allow you an entry for price, right? So um, if we look at the bodies and the wicks of the candlesticks, right? You've got this candlestick here running up higher, and that's the high, right? And then you've got the second candlestick running up higher, and that's the high. And then the third candlestick running a bit lower, but running higher, right? And that's the low of the second candlestick. So this area here where price doesn't connect would be a fair value gap or an imbalance, right? Fair value gaps allow us entries. We use it for entries, and imbalances, the same thing, right? The gap in the market will allow us a fill of price. So it's tradable, right? Um, so you're looking at three sequences, right? Um, the the rules of a fair value gap is that the third candlestick, the second candlestick, so your middle candlestick, needs to take a set of swing highs or a set of swing lows, right? So you've got the third candlestick running up higher, a good impulsive move. You're going to wait for your third candlestick to print, right? And you're going to
Okay.
mark the low of that. So for a buy fair value gap, you've got this area, which is your first candlestick's immediate high. That's your buy candlestick. Buy fair value gap. Here we go. So here's a good one here, right? You've got a low sitting right here, right? And then you've got the first candlestick, second candlestick, and third candlestick, right? So your fair value gap lies at the low of your first candlestick to the high of your last candlestick, right? So three candlestick sequence, 1, 2, 3. In this case, we got a break on the first, right? But we can see that these lows were violated right here, right? So we're going to use the first, second, and third candlestick of this price leg for our fair value gap. And then again, you're marking the low of the first for self fair value gap, and the high of the last candlestick. Okay, as long as the wicks don't touch, it's a fair value gap, it's an imbalance. Okay, it can be big, can be small, but it can be efficient. Okay.
Okay.
Yeah, cool. So those are fair value gaps. So I've got a bit of a different type of order block that I use, right? As opposed to FX Father's order block. So I'm going to go through mine because I don't know his. Okay. So I'm looking for an impulsive move. Okay. Let's look at maybe this area over here, right? So remember that you have active trades that can run once you take a set of liquidity or you fill in imbalance, right? So in a case like this, we've got one low and two lows here that was taken, right? I'll mark that out for you. And this is on the 1 hour time frame. Okay. So you've got that. Now you have to have a takeoff swing highs right there. Let me zoom that in for you. Right, so you've taken the sets of lows over here, you trade back up into that range, you create a swing high right over there. So a swing high consists of a high. Is this thing working? A high, a higher high, and a lower high, right? So in this case, here's a high, higher high, and a lower high. So that is a swing high. Okay, a swing low is a low, a lower low, and a higher low, right? So higher low, lower low, higher low. That's a swing low. Swing high is a high, higher high, lower high. Okay. Now you've got the take of the swing high, right? Immediately we can see the form of a fair value gap right there, right? But what backs this up is something that I call in order block. So I look at the opposing candlesticks. So if we're buying the green candlesticks, I'll look at red candlesticks, right? And I can see that I have a sequence of 2 here before we take that high. So what I do is I mark out that area, the whole sequence, but the wick is the most sensitive part of that, right? So I'll use these two candlesticks and I'll call this in order block, right? And I will look for positions once we come into this area. So remember, this is your 1 hour time frame. You want to look at your lower time frame when you're in this area in order to find that position. Okay, so that's your basic fair value gap order block market structure shift, right? So that is preparing you for the market to change direction. So like here, we were selling, market structure shift happened. We've got the confluences, the order block, the fair value gap right there, and the market runs into that area and we reverse for price, right? To move higher. Okay. Yeah, cool. So check this out on the chart, right? If you're struggling, you're more than welcome to message in the group. I'm sure the guys will help. I'm also very willing to help you guys. Yeah, cool.
Okay, thanks, man.
Was that okay for you?
Yeah, it's fine for me. As I said earlier, if I do have more questions, I will
All right,
just ask
cool,
them.
man.
Nice,
Okay.
nice.
All right,
Are we
cool.
all good?
Anything else, guys?
Mm, no one? Cool. Z, you want to call the session?
Okay, yeah, I think that's it, man.
All right. Thank you so much, man. I think it was really valuable for everyone, especially you guys who want to trade gold on the lower time frames. You know me, I don't go on the lower time frames on gold yet. I don't trade this pair that often. And if I were to do this, it would be at the service of you guys, you know. So let the lower time frame master do that for now. But yeah, gents, thank you so much for joining. And yeah, man, if you guys do have any questions, let us know. I will render the video and then hopefully I can still post it tonight. If not, then I'll post it in the morning for you guys, okay? All right, have a good one. Cheers, guys. Bye.
Thanks,
Alright,
guys.
thanks.
Thanks, Z. Cheers.
Cool, man. Bye.
Ciao.
Good question, man. Cheers.